Hey guys, Scott Phillips from Scott Phillips Trading here. There's a really excellent thing happening in the gold market right now, and I just wanted to have a quick look at it. There's some lessons to be learned. Now, what I've got up here is a chart of December gold, and you can see that what we have very clearly is a sideways high volatility market, and the reason that we're going to label it a sideways high volatility market is that we see these big swings from high to low, big swings, and it's a clear trading range. And the trading range doesn't have to be exact, but over the last couple of days, we have it testing the top of this trading range somewhere around here. So the correct way to view the top of a trading range is a test. So the idea is that if you were going to short the market, the absolute perfect place to short is somewhere close to the top here. So in these last couple of days, what we see as we zoom in is we see the market has tried to go up and failed. We see it's tried to go up and hasn't got very far. It's gone back down, it's gone up, it's gone down, it's gone up. So we've got this pattern of up, down, up, down, up, down. There's no other way to interpret that as other than indecision. And so the way that you can treat this is what is happening here is that this is a competition between buyers and sellers, and they're just exhausting each other in a war of attrition. Eventually, one side or the other just runs out of ammo, and then the other side takes over. And now, if we look very closely at the size of the candles here, see this candle here, this red one, that's a big candle. This one's a little bit smaller. This one's a little bit smaller still. This one's a little bit smaller still. And this one, this little piggy's the smallest of all. So what we can see here is this candle is just about the smallest candle in a while. So after a swing of decreasing volatility, we can expect a swing of increasing volatility. And so what I mean is after smaller and smaller moves, we can expect bigger and bigger moves, because price is not very predictable, in fact not predictable at all, but volatility is highly predictable and mathematically predictable. Okay, so here we have this bar. There's some stuff going on that you're not quite aware of here. This bar, see how we've got a micro gap, it's opened above the previous close but below the previous high. This little micro gap is a sign of strength. Now what we have here is it's opened at the lows, it's closed near the highs, there's almost no selling pressure at the close, no one's tempted to take profits here, everyone's long and strong and holding. And so at this point here, the fix is in. This is off to the races now. Now here we have another gap, a breakaway gap. Now this is not the sort of gap that you would expect to be filled. This is a runaway move. So the odds are very strong that we're in the start of a new, very bullish phase in gold, which has been threatening to happen for a long, long time. And if we look at a monthly chart, you can this is a monthly chart of December gold, it's not the continuous, but you can see clearly that on a longer term basis we've got an uptrend which has retested the lows, and now it's finally broken out. And I think this is the start of a major move, and this would be a good one to get on. So thank you very much.